Hey everyone, John AG here. In markets like these, every click feels like pulling the pin on a grenade. One moment you're calm, the next you're staring at a chart wondering if you just bought the absolute peak. I did exactly that. I bought gold and silver right at all-time highs. What happened next taught me something I didn't expect. And if you've been stacking lately, you might recognize the same strange mix of excitement and panic that hit me. Before we dive in, a quick request. I'm running a campaign against copycat channels that recycle content. If you value original analysis, support this channel by subscribing and leaving a comment. Even just Argon AG helps the algorithm recognize you're here. For daily updates and premium analysis, I don't always share on YouTube. Join my WhatsApp channel, link in description. Doctor, the fundamental misconception. Most people approach gold and silver like stocks. Buy at a price, hope it rises, celebrate if you win, sulk if you lose. This mindset is precisely how people get emotionally destroyed in a metals bull run. Here's what they're missing. When you buy metal, you're not just acquiring a shiny object. You're exchanging one form of money for another. The difference between these two forms is the entire point of this story. What we usually pay with paper notes, digital balances, promises. These aren't wealth, they're claims, IOUs. A system of debt dressed up as stability. You can feel this truth in your bones the moment markets heat up and premiums turn volatile. Gold and silver aren't promises. They're not liabilities. They're assets you can hold. That's why, even though I bought at the top, this isn't a tragedy. It's a lesson that becomes even more important when prices are screaming higher, headlines are screaming louder, and everyone around you believes the chart can only go one direction. The silver purchase. Layaway at record levels. Not long ago, I walked into my local shop and saw a piece I liked. Not because I thought it would moon, not because some influencer recommended it. I liked it because it felt like real money in my hand. The price tag, sitting at record levels. In a normal market, that would make most people walk away. The rational voice says, wait for a dip. Be patient. Don't chase. The problem with waiting. During a bull run, waiting for the perfect dip can turn into waiting forever. People watch the train leave the station while standing on the platform with their perfect plan. I did what many stackers do when they don't want to commit all at once. I put it on layaway. Layaway is a strange psychological tool. It makes you feel like you own the metal before you actually do. It locks in your decision, and you live in this in-between world where the price can move against or for you while you're still paying. The dangerous lesson. While I was paying it off, silver kept climbing. Instead of feeling regret, I felt guilty relief. Okay, maybe I didn't mess up. You know what that does to your brain? It teaches the wrong lesson. It teaches you that chasing highs gets rewarded. That's exactly the kind of lesson that sets people up for punishment later, because markets love to humble confidence. But in that moment, the chart was on my side. I finished the payments, picked up the piece, and by the time it was in my hand, the metal had become even more expensive. On paper, it looked like a win, but hear me carefully. That's not why I stack. Stacking isn't supposed to feel like casino night. It's supposed to feel like building a firewall around your savings. Still, I'm human, and I felt that rush. That rush is where the story turns. The Sunday night gold purchase. A couple weeks later, it was Sunday night. Markets were thin. You know how Sundays can be. Charts look jumpy, moves feel exaggerated, and your brain starts playing games. If I don't buy now, I'll be priced out. If I wait, it'll gap up. What if this is the last chance? I did something I almost never do. I bought gold online during the Sunday night session. I'm telling you straight, it wasn't a calm, calculated purchase. It was fear-based, that quiet panic that shows up when you've watched prices run and feel like you're always one step behind. I knew it was risky the moment I clicked. Buying at all-time highs is like stepping onto a frozen lake. It might hold, it might crack. You don't find out until you're already out there. The strange outcome. Here's where it gets interesting. After I placed the order, I expected the usual sequence. Either the price cools off and I feel stupid, or it keeps rising and I feel smart. What actually happened? By the time the package arrived, the market had moved so fast that the gold I bought was sitting under spot, even though I bought at the high. Let that sink in. In a market that's ripping higher, I somehow ended up with a purchase that looked like I got a deal on paper. The real realization. That's the moment I understood something most people don't grasp until it's too late. In a real bull market, your emotions can become your biggest enemy, even when you're right. If that trade had gone the other way, if gold had dropped $200 instead of climbing, I still would have been okay. Annoyed? Sure, stung? Absolutely. But not broken. The reason is simple. I didn't buy gold because I thought it would make me rich next week. I bought it because I don't trust paper to hold value forever. Understanding sound. Money versus unsound money. Let me put this in the clearest way possible. Paper money is designed to lose value over time. That's not conspiracy. That's policy. The entire modern system runs on expansion. More credit, more debt, more currency units, more promises stacked on promises. Every time that happens, the measuring stick gets smaller. When people say gold is going up, they often forget. Gold may not be rising as much as the paper is falling. Silver is the loud cousin that screams this truth in public. It moves harder, swings wider, rewards patience, and punishes impatience in the same week. Narocher, the core, fear, buying at the top. The most brutal thing about stacking in a bull market is this. You can do everything right and still feel wrong. You can buy responsibly, stay consistent, dollar cost average, and still watch the chart dump the day after your purchase. That can mess with your head if you came into metals expecting constant validation. The liquidity reality. People obsess over spot price like it's the only thing that matters. But in the real world, when you hold physical metal, there are two prices. One, the paper price. Two, the what can I actually sell this for today price. These aren't always the same. In calm times, they're close. In hot markets, that gap becomes a canyon. Premiums widen. Inventory disappears. Dealers get picky. Shops get swamped. Online spreads shift faster than you can refresh. You can win on the chart and still feel stuck when you try to move metal quickly. I'm not saying this to scare you. I'm saying it because people who pretend this doesn't exist set newcomers up for disappointment. The critical question: stacking or chasing? After the gold arrived and I had that moment of relief, I asked myself a hard question. Am I stacking or am I chasing? That question is the difference between a calm stacker and a stressed gambler. I made myself a rule. Every time I feel urgency, I slow down. Every time I feel like I have to buy right now, I step back and remind myself, the market will still be here tomorrow. There will always be another candle. The only thing that truly matters is whether I'm building my position responsibly. Handling the fear. But John, what if the market goes vertical and never looks back? Let's handle that fear honestly. If the market goes vertical, it will eventually correct. If it never corrects, that means something bigger is breaking in the monetary world. In that scenario, the fact that you own metal matters more than whether you bought $10 cheaper. Either way, the solution isn't panic buying. The solution is consistent buying with a plan. Yach, my anti-panic checklist. Here's my practical framework. Steal it. 1. Decide the maximum I'm willing to buy in a month. Not if I feel like it, a hard number. 2. Split that number into smaller bites. 3. If the price rips, I don't chase. I stick to the schedule. 4. If the price drops, I don't freeze. I stick to the schedule. 5. Keep some dry powder. Not to time the bottom, but because it keeps me calm, simple, boring, effective. Why this matters. Slow and steady is how you avoid becoming someone else's exit liquidity. The loudest voices online rarely show you what they did after the hype cooled. They show the entry. They hide the stress, the sleepless nights, the regret. If you can stay disciplined while everyone else is emotional, you're already ahead. The mindset shift. The strange thing that happened after I bought at the high wasn't just the price movement, it was the mindset shift. When I realized my gold was under spot by delivery, my first emotion was relief, then pride. Then, if I'm being honest, a little arrogance. Right there is the danger. When you get rewarded for a fear-based decision, your brain starts believing fear is a strategy. Fear is never a strategy. Fear is an alarm, sometimes useful, but never a plan. The replay exercise. I forced myself to replay the purchase and ask, if the outcome had been different, would I still think this was smart? The answer was no, which means I got lucky. Luck is fine, but if you base your stacking on luck, you're building on sand. The physical experience. Holding metal changes you in a way that charts don't. When you hold an ounce of gold, you feel density. When you hold silver, you feel weight. The sound of metal hits a part of your brain that paper never touches. This isn't romantic nonsense, it's real. Money used to be something you could feel. The system replaced that with numbers on a screen. When you stack, you're reconnecting with a more honest form of value. That alone has value. It's why even if prices fall, I don't regret owning it. What if you actually bought the top? What if someone bought silver at the absolute peak and it fell 20%? What if someone bought gold and it slid for 6 months? Do they lose? Only if they sell in panic. If you don't need to sell immediately, you have time. Time is the most underappreciated asset in the metals world. The smartest stackers I know don't obsess over today's price. They obsess over their accumulation and security. They build their stack like a fortress, not a lottery ticket. The framework: sound money versus unsound money. When you hold a paper note, you're holding the promise of an institution. When you hold gold or silver, you're holding value that doesn't require permission. That difference becomes painfully obvious during crisis. I'm not predicting a specific crisis today. I'm giving you the framework because frameworks outlive headlines. If your wealth is fully inside systems that can be frozen, taxed, inflated, or restricted, you're vulnerable. If a portion of your wealth is outside those systems, you're less vulnerable. That's why people stack. Jacri, defining enough. There's a moment every stacker hits where they realize they can't buy everything. You'll never have enough if your definition of enough is emotional. You need a rational definition, a percentage of your savings, a weight goal, a number of months of expenses. Whatever it is, define it. Because if you don't define it, the market will define it for you, and it will never be satisfied. Munner. For new stackers. This bull market is pulling fresh eyes into metals. If you're new, you're probably feeling two things simultaneously. Excited because the chart is ripping, terrified because you don't want to buy the top right before a crash. That fear is normal. But understand this: there is no perfect entry. Every entry has risk. Wait for a dip? It might not come. Buy now? It might dip tomorrow. The goal isn't to time the perfect moment. The goal is to manage your exposure and build over time. Sometimes you will buy at the top of a swing. That's life. That's also why, if you're doing it correctly, your stack is made of multiple purchases across multiple prices. The aggressive truth. This bull market is going to end. Not because metals are bad, but because markets cycle. When it ends, the people who chased, maxed out, and bought emotionally will feel the pain. The people who stayed disciplined will sleep at night. If you feel yourself getting emotional right now, I'm not telling you to quit. I'm telling you to tighten your plan. Measuring success. Differently. Don't measure your metal in dollars only. Measure it in security, independence, peace of mind. Don't let a bull market turn you into a gambler. Don't let a correction turn you into a quitter. Keep your community strong. Drawer. The mental trick. When you buy metal, mentally mark it as not for sale for a set time period, 6 months, 1 year, 5 years, whatever fits your plan. The moment you view it as inventory to flip, your mind starts hunting for exits. That creates stress. If you view it as savings you can hold, your mind relaxes. What I'm doing now, I'm staying consistent, spacing purchases, watching premiums, focusing on what fits my plan, resisting the urge to treat this like a sprint, because stacking is a marathon. The final lesson. The strange thing about buying at the all-time high, it didn't change my conviction, it tested it, and I passed the test because my conviction was built before the purchase. If your conviction is built after the purchase, it's fragile. Build it now. Study the history of money. Understand what inflation really is. Understand why people have chosen metals for thousands of years, then your purchases become calmer. 3. Thought experiment. Ask yourself, if gold dropped $300 tomorrow, would you be okay? If silver dropped $20 tomorrow, would you be okay? If the answer is no, you're overexposed. That's not an insult. It's information. You can adjust before the market forces you to. Closing thoughts. Gold and silver don't make you rich. They stop you from getting poor in slow motion. In a world where the measuring stick is shrinking, stopping the slow bleed is a form of victory. All-time high is a psychological trigger. It sounds like the end, but in many markets, all-time highs can be the beginning of a new range. The phrase itself makes people freeze. Instead of thinking all-time high, think new price zone. Then ask, can I build in this zone without losing my mind? What matters? Winning in metals isn't about bragging that you bought at the perfect moment. Winning is about preserving purchasing power through cycles. You can lose on a short-term price move and still win over the long arc of time. That's why the all-time high purchase didn't break me. I wasn't buying a trade. I was buying insurance, and insurance sometimes feels expensive right before you need it. Your turn. I want to hear from you. Have you ever bought at an all-time high and watched the price move against you immediately? What's your biggest fear right now, missing the move or buying the top? What rule keeps you from spiraling? Drop your answers in the comments. Even if you don't know what to say, just write ArjgonAG so I know you're here and the algorithm knows this channel matters. If you haven't subscribed yet, do it now. It takes a second and supports this work in a real way. Don't forget to join the WhatsApp channel, link in description, for daily updates, voice notes, and analysis. I don't always post here. Check out the members-only video for deeper analysis and complete updates. Take care of yourselves. Take care of each other.